Do you think you're missing out on returns by being equity only in retirement accounts for people like me? Do you think we need to be doing something with options and learning how to leverage those, or no?
You just can't get people to believe the types of returns that you get from a move like that. I mean, that Costco trade is well over $1 million profit just by leveraging 100 grand. Apple
Yep.
for me was I bought it off of the VWAP. I got a nice pop. The option went up a buck. That's 10 grand. I'm done, right? I'm good. They received $6 million and basically said to the market, Applied Materials will not be at 150 by the third Friday in March. And I'm so confident in that. If it does fall below 150 by the end of March, I'm willing to buy this stock at 150. And she bought before earnings. They missed, and the stock got hit pretty good.
I see it. Yep.
And then
down to
she stepped back in and bought more. And when she stepped back in and bought more, I was like,
dude, that's the bottom of 24, dude. And it's up 50%. What's up, traders? Welcome back to the Day Trading Show. Today, I've got Ron Chero in the house. Ron is one of the guys that runs the Steam Room with Sangalucci and Wall Street Jesus and all the good people there. Ron is a plethora of knowledge. We talk VWAP, we talk EMAs. He has some great tips about keeping losses small. We talk about how big of an Eagles fan he is. He talks about $1 million trade that he hit on Costco, I'm pretty sure it was. We talk about how he's writing some of these options. So a lot of good info in this episode. Just a big thank you to him as always. Thank you to our sponsors as well. We got to thank them. Wouldn't be able to make this happen without them. And of course, make sure you guys are subscribed so you don't miss any of our future episodes. Now, let's get into the podcast. This episode wouldn't be possible without Top One Trader. They have a brand new instant funding model that I think everyone needs to try. There's 5 different accounts you can choose from. You can hold trades over the weekend, and there's a 90-10 profit split. So use my link in the description, use the code ASFX to save on your next instant funded challenge. And as always, thank you to Top One for being a sponsor of the podcast. Now let's get into the episode. So talk to me first about what's going on with your trading lately. I think it's been over a year since we've done a podcast. So what's changed? That was the first question I wanted to jump in with. What's changed in your trading over the last year? And maybe if you want to elaborate for the audience, not just on what's changed, if anything, why? Why has something changed for you specifically?
I think we went through a period where as an organization, the Steam Room, myself, Sangalucci and Wall Street Jesus, we were doing some things, and one of those things was, hey, let's throw up our daily P&Ls and let's trade daily and this and that and make it available to the public. And we did some public streaming. And what I learned from it was, hey, I'm not really great at trading at scalping off of the open. As a matter of fact, I had a period where things went really well. And then I got caught in a couple of trades that really didn't go very well. And then it just kind of dawned on me that, hey, I need to change how if I'm going to scalp, I need to change how I approach that. And for me, that was like, I'm just not going to trade the open. It's like you hear a voice like Brian Shannon, hey, chase the gap or wait for VWAP. And I'm like, yeah, I can wait. I don't need to jump into stuff right away. That's probably been the biggest change in my scalp trading, but my long-term and swing trading, those things really haven't changed that much. But, I think out of all of that, what we did was there were a lot of trolls that showed up when we were doing the free live broadcasts in the morning. And I was like, what? We're giving away the best content for free. And you got a bunch of guys in there that are trolling us every day. That are like, why would we ever pay for it? You gave us the best stuff free off. And I was like, enough, shut it down. So all, all of those guys that, when we show up now and do webinars, they're like, when are you going to come back and do the morning webinars again? And, we're not.
Right, right.
You don't get
Yeah,
that shit for free. You know what I mean?
that's 100%, bro. And it's funny we bring that up. Just we'll sidebar on that. The streaming for free. It's what everybody does on YouTube. We'll
Yeah.
stream. We stream behind a paywall, just like you guys do, because I think
Yep.
if you're going to just attract such a better audience. They retain so much better. That, like you said, the quality of trader is so much better than when you're doing it for free. I think
Yeah.
everybody does it for free too. It also makes us look different when it's like, okay, I'm actually paying for something. People take it more serious too. They value it highly because they're
True.
paying for it.
Yep.
So the information they take in from that, I think, is more well received, more well retained often. And it also, it opens the door for really good networking. I find like even with our higher ticket product stuff, as I'm sure you do, like those people, they take trading extremely seriously. So they want to learn from other people. They talk to other people. They try to take value from it there too. So it's just way
Yeah.
better than doing free.
Yeah.
And also YouTube, China censoring us on live stream. Dude, come on, come on. We got enough communism. We were talking about California. We don't need China involved in our live streams, okay? But with the VWAP scalping at the open, can you elaborate just for a second? I have a couple of guys in the coaching program right now. One of them specifically trading options. We had a great November, struggled a little bit in December, and is trying to find his way back. Still hasn't found his way back. And I wanted to kind of use him as an example because I think you could, maybe give me some good talking points to him. But he struggles with getting sucked into some trades too quickly at the open. He finds if he can force himself to wait, he's has a much higher win rate. So what do you think
Yeah.
that is? How do you perceive that?
You know what? I really give a lot of in our earlier conversations, you would always ask me, give me your top five trading books. And for me, the most for over, I don't know how many years I've been trading now, a very long time. And the lack of hair and white hair reflects that. Um, there are very few books that I read about trading that I come away from them thinking I learned something. Most of the time, I come away from them thinking, you just wanted to show me how smart you were. And you gave me a bunch of sound bites for a cocktail party, but I didn't get anything useful from you, right? The one exception to that is the book that Brian Shannon wrote, right? And I keep it on my desk, right? So I'll give Brian a shameless plug. There you go.
Well, we'll touch tips. Come
Exactly.
on.
There you go. So, I mean, this book is, from a trading perspective, has made a huge difference in just my approach. So, for example, when you're talking about, well, what are the things that you can talk about that would help somebody? So, oftentimes the emotion of any kind of a trade, and I don't know what this trader that you're talking to me about trades or what his time frame is. I like individual names. I will sometimes trade SPY and Qs. I will trade some other ETFs like SMH, et cetera. But typically, I like individual names. And for me, there are some really good teaching points in Brian's book. And for me, it's always been about starting with what time frame do I need to look at in order to make a decision in the short term, if that's what I'm doing. So I always look at the daily chart and I immediately say, which direction is the primary trend? Is there a primary trend? Is it up? Is it down? Is it sideways? And then if I'm going to trade shorter term, I know, for example, if something is in a downtrend and I want to trade for a bounce or a move up, to me, that's a very low probability trade because I'm fighting the primary trend, right? Whereas if something is in an uptrend and it's had a bad spell and now it's finding some support and it's starting to move back higher, I have better probability in that environment looking for, something long. And you hear Brian talk about the different moving averages and where people are bullish or bearish, right? Like if you're an investor, you're a bull above the 200-day moving average, the SMA. If you're a shorter or an intermediate term trader, you're bullish above the 50. If you're a swing or a day trader, you're bullish above the 20 and the 5, right? And those things need to be moving in your direction just from a probability standpoint. So for me, the easiest thing to say is I look at the daily primary trend. And then if I'm looking for a scalp and something is running, is it above a rising 5-day moving average? And if it's ahead and I'm excited and I want to be involved, I know I need to be patient and at least see if I can get some kind of a fade back to the volume weighted average price for the day, right? And maybe it pulls back to yesterday's volume weighted average price. Like if you read Brian's book, he's got some really good pointers about where you look for opportunity in those spots. He's not saying you buy in those spots, but you look for opportunity. And being a level two tape reader, I look at those spots to see if I can find change in tape. So now instead of like trying to be like all gung ho off of the open, I wait and then I assess the opportunity and do I want to scalp it or not? So that's been like the biggest adjustment that I've made from when we were doing our stuff live, and I had some really nice successful trades, and I had some really spectacularly bad ones. And this going to this type of a model, a process, has really evened out what I'm doing. And people always talk about, well, keep your losses small, but nobody tells you how to keep your losses small. So if you're let's say you're going to be long and you're getting long off of a pullback that touches the VWAP, well, I'm going to limit my loss because I know if I go below that point, I got to cut it. That's how I keep my losses small, right?
Yep.
So, I just gave the secret sauce to how to keep, your losses small. But I bet you 9 out of 10 people can't tell you how to keep a loss small. And
I
that's,
would agree with
that's
that.
kind of what I've done.
And even if they know, okay, I'm trading off of this VWAP break, when that VWAP is given back, I need to get out of the trade. Are they going to actually do it? Definitely nine out
Right.
of 10 people will either not know or struggle to do it, right? And react to
Yeah.
it. I think the
Yeah.
VWAP works so well because it's reactionary, right? It's like it is not waiting for a crossover to happen. It's not waiting for a number to be hit. It's are we above or below? Buyers or sellers? Who's in control? What are some
Yeah.
of the most important VWAPs to you that you're looking at? Do you say VWAP or
Well,
VWAP?
I don't know which one's
This is
right.
the
Like
question of the year.
tomato,
Somebody fucking call Brian.
tomato.
Brian, what is it? VWAP, VWAP. Be
I don't
clear.
know. With tomato, what do you like to say? I don't know. It doesn't matter to me.
Doesn't matter.
I think more times than not I see VWAP, but I think a lot of people say VWAP, whatever. Um, I think what's probably most important or useful to me is that within the steam room, we also have our own way of looking at things, and we have what we refer to as the Gex ray. It's an internal tool that our guys built, and it shows us where the put and call walls are, and it shows us where zero gamma is. And zero gamma more times than not lines up with where VWAP is. And oftentimes you see change in, direction when something gets to VWAP, whether it goes up to VWAP and changes, or it comes down to VWAP and changes. Sometimes it crosses over, sometimes it crosses down. And those levels that we have on the Gex ray help us make decisions as to what we want to look for. So if you're biased for, hey, this is a move up and I'm looking for a fade and I want to short it, how do you find the extreme area of where that change might occur? And that's what we're looking at. So it's not guessing. Do you know what I mean? We're trying to make an educated guess based on where we see that supply and demand. And if we're in the right spot and we're trading at extremes, we're doing those things of keeping losses small because we know immediately whether we got it right or wrong, right? So if you enter and the price starts going against you, and you look at level two and there's, you're trying to short and there's still buyers there, you're like, I got it wrong, take it off and wait. And some days you wait and you get it wrong all day and you never get a trade. You know what I mean? Like today's a good example of a very strong trend day. And the tools that we use are not foolproof. Um, like everything else, they're guidelines. There is no such thing as we're going to apply this formula and it works 100% of the time. That's just a bunch of crap, right? So we use it as guidelines, and there are days when the guidelines don't work. It's
Of
just
course.
how trading goes.
Yeah. Do you find that in line of the important VWAPs, like today's market open VWAP, like Brian talks about, yesterday's market open VWAP, those two are probably the ones that you're looking at and relying on the most. And do you find that, are you trading like today? There's a couple of good opportunities on especially around 12 o'clock. It looks like on SPY. I'm looking at ES on the futures chart, a really good bounce off that New York VWAP. Is that a trade you're looking for, or are you looking for more of the reversion back to the New York VWAP? I know you're saying, it seems like more in trend. So I'm going to guess you're leaning more towards that bounce play and that we've been above it, we've gotten back to it. Let's go back away from it play. What do
I,
you think?
I kind of revert back. Like if you look at the cues right now,
Okay.
and I'll give another plug to another guy that's out there that I use TradingView because I find it to be very portable.
Yeah.
It's a good visual platform for me. I'm very visual when it comes to things. So if all of this information gets plotted and I can see it, I know that the how the sausage is made and all of the technical mathematical stuff has been built by guys that know what they're doing. And all I have to do is reference a visual. It makes it so much easier for me to
Oh yeah.
just to get through my day, right? So on TradingView, there is a tool that's called the Level Up Alpha 2.21. It's written by a guy by the name of John Muchow. And he's on Twitter also, and he employs, and he's a follower of Brian Shannon as well. So
Okay.
I look at, Brian loves the 5-day moving average because Brian is a swing trader. So for example, look at the cues today. The
Hmm.
cues are in the primary trend is still up, but the
Yep.
5-day moving average is above the price and is still declining. So you're fighting a short-term downtrend, but it doesn't
Yep.
mean that the index can't pop all the way up to that 5-day moving
And
average.
retest
So
it. Right.
exactly. So for now, I scalped Apple and Amazon this morning. I did well. I scalped Boeing this morning. I did well. I'm 3 for 3. I don't need any more. And at the same time, it still kind of bothers me to watch the Qs continue to go higher.
Oh, it definitely. I had longs pre-market, made money pre-market, banked 500, missed the longs off yesterday's VWAP on ES around 10 o'clock this morning. So, called it on stream, but didn't take it, hesitated. When I was talking about this, so maybe we can stem on this because you're in the markets every day. I'm in the markets every day. That's why I think people like this kind of conversation. You know how important it is, man. It comes down to like 2 or 3 minutes sometimes, and if you hesitate and
Yeah.
miss, then I'm looking at the chart and I go, yes, I could make money if I buy now and it still goes up, which it probably will. I'm looking at the book map. I'm seeing the order flow pulling me higher. Deltas right. So same kind of thing how you're looking at level two. I'm looking at book map. So I'm seeing the move up most likely. But I know if I take that late entry and am wrong, it's an easy one to really kick myself for. How do you handle
Right.
that? Real quick, before we go any further with today's podcast, I want to thank our second sponsor, Edgeful. Edgeful is the only tool you need to reach your trading goals. This is the one-stop shop. If you're trading stocks, futures, or crypto, you can go into Edgeful and gather all the information you need to refine your edge. Whether it's the report on how often the gap fills or the report on how often we make a new high of day in Power Hour, all of those answers are given to you and updated daily in Edgeful. So use the link down below, check out Edgeful. This could be a tool that changes 2025 for you. So I'm being serious. This is definitely worth your time. And if you want to see us use it, come check out ASFX TV. But I got an Edgeful link in the description. Definitely go check that out. And of course, thank you to them for being a sponsor. Now let's get back to the video.
Again, I think it comes to the way that I've dealt with it is to be more patient, and meaning if I get like time frame, right? So for example, I was scalping Amazon, Apple, and Boeing this morning. I'm
Mhm.
looking just for, okay, did I make a buck? Did I make a couple of bucks? Have my options doubled? I just know as an options trader that those things are very different than trading equity. So for example, if I'm trading weeklies, it's Tuesday, I know that implied volatility and theta are a factor. And if I don't get the move that I'm looking for in that moment of time, I'm either going to absorb a bigger loss than normal than the equity holder would because of those factors that I can't control. I can't control implied volatility. I can't control theta. I can't control time. So missing a move higher on a short-term basis, I've learned to live with. And one of the reasons that I've been able to live with it is because I also have other time frame trades that are always going, right? I have very long term. I have long term in the form of leaps, and I don't really stress about those types of trades on days like this. And I'm not really missing anything because my long term positions on days like this perform very well. So I don't feel bad about leaving money on the table. I don't like it, but I'd rather, from a short term perspective, if I doubled on an option, that's 100% return. Like I can't. Where else am I going to go and get 100% return in 10 minutes? It just doesn't happen. You know what I mean?
Yep.
So I still feel good about those, but would have liked to have banged out 400 or 500% in a day? Of course, of course. It's just
Of
hard for
course.
me to do. It's just hard
It's
for me to do.
it's more about the consistent wins, right? So if you can find a way to read with VWAP, take advantage of as many of those 100% gainers over the course of the year, you're going to come out okay. Catching every move is extremely difficult, as we know.
I hate giving it back. There's
Yeah.
nothing worse.
No, nothing worse, man. Nothing worse, especially when it comes to you easy. I have a couple of guys that are again another thing I see some people struggle with is like trades will move in their favor very quickly and their mind switches instead of like, wow, that was an easy win, give me that easy money. They go, wow, this has to keep going. This is going to give me so much more. You
Yeah.
get that euphoria that like it can't turn around. Without saying that, that's what you're saying kind of thing. Instead of like the humble, grateful, like, cool, 3 minute flush, nice, easy win. Let's take that. That's a hard one to reprogram for people too. You got any advice on that one?
Well, I feel like I have an advantage as an options trader
Why?
because I can roll to a different strike. So, for example, let's say I have a
It's
double
true.
on something. Let's say I buy something let's say I buy 10 contracts for at two and spend $2,000 and it doubles and it goes to
Hmm.
four. I've
Hmm.
made $2,000. Let's say I still want to stay in the trade. My solution to that is is to sell the call option that I have and take half of the profit, not half of the total, not half of that 4,000, but to take half of the $2,000 gain and put it into a lotto strike and see if it continues to go. And if it doesn't
Mm.
continue to go, maybe maybe I'll give $500 back,
Right.
right?
Right.
To see if I'm right or wrong. And if I'm right, then that pays. If I'm wrong, I give $500 back. I still made $1,500 on the trade.
Yep.
So, and the other thing is people always ask me like, well, you're an options trader, that's super risky, and you're taking all of this risk on. If you don't understand all of the mechanics and where you're going to make money in options and what the time frame is, yes, it's very complicated and it's very slippery and it's very dangerous. But if you understand how they work and you apply them properly, it's the best hedge that there possibly can be. Like I don't want to buy 1,000 shares of Apple. Is Apple trading out right now? I don't even know. So I'm gonna be
Mm.
pissed when I look at this chart. I know it. Yeah.
238. Oh, it's up
Yeah,
almost
Apple's trading at
4% today.
238. So why do I want to risk $238,000 to make $1,000 or $2,000 when I can
No, it doesn't
risk
make any sense.
$2,000 to make $2,000? That's a better advantage. It's a better risk reward. It's a better hedge to me because I'm capital wise, I'm way better hedged than the equity holder. So it's the same thing
Absolutely.
with leaps, right? People are like, oh, you only trade leaps. I'm like, no, that's the starting point, and it's all time frames. So there's a different trade for every time frame that you're in, right? So it all comes back to that. And people, when they ask me about leaps, they're like, well, what's your hedge? And I'm like, the fucking leap is the hedge. I don't have the capital risk. What do you mean?
Right.
What's my hedge?
Well, I think they're just
So
undereducated. When you
they
have like,
are,
because I think a lot of the time you guys like, I love the clips that I see from the steam room. It seems high level though. Sometimes you guys talk some shit just like we do. I'm sure it gets fucking rowdy in there. I can only imagine.
yeah, it does.
Is it too high level? And like for someone like myself, that's a futures guy, I was Forex, now I'm futures. I still haven't dabbled in options. Is the steam room a good start for somebody like me? Because like I said, I've got a guy in the coaching program. I come across options traders. Where do you direct them? Do you say come into the steam room and throw yourself balls deep?
Well,
Or is that like hazing and then they want to hate trading because now you guys are hazing? You know what I'm saying?
it's for us and the traders that are in the steam room, and we have people from all different walks of life. We have
I'm
people who
sure.
are professional money managers that run really big books. We have guys that run family offices. We also have traders that come to us that don't have large accounts that are looking to learn. And
Yeah.
not everybody, even between myself, Lucci, and Jesus, the three of us do very different things. I use options and I use them in a way that I was educated with, and I use the tools that are in the steam room to help enhance what I do. Lucci will trade options, but he trades them in a different way that I do. He also trades futures, and Jesus only trades equity, and he's a long only trader. So coming to the steam room has something for a lot of different types of traders, but somebody who really, if you really want to learn options, we offer that education. And the the funny thing about options is the more you know about them and how to apply them, that's where the game becomes more um, it becomes more sane, it becomes more hedged, it becomes a safer game to play. But for the uninitiated,
It's
it,
dangerous. It
it's
can
just
rip your head
not
off.
it's just not a good place. So it
Yeah.
really depends on the individual. If the individual is like, I really want to learn how to use them, we teach that, right? But if you're brand new and you don't have a desire to learn it, or it just comes across as being too complicated for you, you're gonna struggle. You know what I mean? There's no easy way
Absolutely.
to say, yeah, come on over, man. We'll teach you options. It's easy. Like it requires once you learn the important things, you see the options world in a different way, and you're like, okay, I get it, and I know when to apply it and when not to apply it. Whereas I think most people are like, oh, you bought call options before Netflix had earnings and it's up $100. You're a fucking genius, right? Like that's the majority of how people see
People
that
try to
world.
do it. Right, right. But
Yeah.
the options can be used in a lot of different ways. It feels to me like options are like they aren't the mechanics that are moving the market, but they seem to have a very strong influence on price of securities more maybe than people would think. Am I right to think that? Like the
Yeah,
security, the stock price is not just the price of the equity. The options market is so big, I feel like it has some influence on it, right?
yeah, that's I think that's 100% true in some circumstances, because options are the tail on the dog, and the tail can't wag the dog, right? So
Hmm.
there are instances, however, when and this is what we look for in the steam room as well, is we refer to it as sweeper activity. Other people refer to it as unusual options activity, or UOA. And we're looking for, hey, are there any anomalies out here? Is there somebody out here trying to cheat that maybe has information in front of other people? A good example of that in recent memory is Applied Materials, AMAT, and most recently Workday. You get somebody that shows up that sells puts. They're collecting premium. So like in Applied Materials, somebody came out and sold $6 million worth of premium on Applied Material March 150 puts, meaning they received $6 million and basically said to the market, Applied Materials will not be at 150 by the third Friday in March. And I'm
Right.
so confident in that I'm willing to sell these puts and take, if somebody's gonna, if it does fall below 150 by the end of March, I'm willing to buy, however, and I don't remember the number of contracts. I'm willing to buy the stock at 150. That's what they're saying, right? They're taking an obligation at
Right.
150. So if the stock finishes at 130, that's, they're upside down 20 points, right? So we look for those types of things because it shows how much confidence there is in whatever the strength of that bet, right? So if we see that type of activity, um, that can lead to others looking at that and saying, oh shit, somebody knows something. And then you see the equity respond in kind. Does that make sense? So it doesn't
Absolutely.
necessarily move the market, but it signals to the market something's up here, right?
Interesting. So a lot of what you guys do in the steam room is based on this unusual activity where you have scanners and stuff that's going to try to spot it, where a big
It's
player
not
could
the
be
only
moving the
thing, but
market.
it's yes, it's not the only
It's a
thing.
big
It's
part of it.
it's a piece of the puzzle, and when you combine all of these different things, like what I'm talking about, like
Mhm.
where's the put and the call wall on the major indices, and you see this sweeper activity. Where's the sentiment? all of these things. Where are you at on VWAP? Where's the 5-day SMA? What's the primary trend? When you learn how to combine all of those things, it as an options trader, it tells you, okay, what duration of trade do I need to be in, and what
Mm.
strike do I need to be in, right? And that's it. Once you learn how to combine those things, it can be very powerful.
Are you scalping in the sense of minutes? Just for reference for
It
some of the
it
listeners.
depends on the day. So if
Okay.
typically when I say scalp, I am looking for a move to happen right then and there. And if
Right.
I don't get it, I'm out and I'm looking for the next spot, right?
Got it.
A lot of times I try to turn a scalp into a longer trade, meaning can I stay in this thing for the day? Like Apple, right? Like
Yeah.
I made a buck on the contracts that I was in. And when you're trading 50 lots and 100 lots, you don't want to hang around if there's any kind of a wobble, because you can turn a $2,500 gain or a $10,000 gain into a $10,000 loss
Quickly.
really quickly, right?
Yeah.
So,
Yeah.
and it's fun when it's working, but you've got to be looking over your shoulder in every minute to see if you can, stay in that trade or make it work. Like Apple
Yep.
for me was I bought it off of the VWAP. I got a nice pop. The option went up a buck. That's 10 grand. I'm done, right? I'm good. And I did it in Amazon and I did it in Boeing. Like that's a very, very good day for me. I don't need to stick around and try and bang out the $100,000 day. Would I like to? Of course, but I'm not gonna put myself through the emotional anxiety of trying to do that. Right? I'm
Yep.
okay with the gains that I have, and I've
100%.
you got to live with it, right?
You got to
Yeah,
live
you
with
could
it.
have made a lot more money for sure, but you know what? That's why I have other time frame trades, because those other time frame trades are doing great on days like today.
Right. So before we go into the higher time, because I do have a question on that, maybe
Yep.
like
Yep.
portfolio wise, you mentioned that in the steam room, you guys are working with some bigger funds, family office type stuff. What are
Yeah.
they using options for? And like maybe if that's not a specific enough question, are they limited in how they can use options because of their size or because of what they have to get, uh, not approval on, but what they have to be audited for, so to speak, and things like that? We want to give a big thank you to TradeZella for being a sponsor of the podcast. That means you guys get to save when you sign up. Either use the code ASFX10 for 10% off your monthly membership or ASFX20 for 20% off your yearly membership. If you don't know how to use TradeZella, we've got you covered there too. So we're going to help you save when you sign up, and we're going to teach you how to use it. Go to my YouTube channel, the ASFX channel, and watch the hot seat playlist. That's going to show you how real traders like yourself are using TradeZella today. We cover all the features, all the tricks, all the tutorials are right there for you. So big thank you to TradeZella, and let's get back to the video.
It's a great question. A lot of bigger books can't they can use options in really liquid names, but the minute you roll into a name that has less liquidity, oftentimes they're all of the open interest, right? Like they
Right.
are the volume,
They are
right?
everything. Right. That's what I'm saying.
That can be really dangerous, right?
Right.
So I've worked a lot with smaller hedge funds and family offices, and one of the things that is popular is a lot of these guys will have equity, and I teach them how to apply collars. And all a collar is writing a covered call and buying a put, right? So
Right.
you're writing a covered call, and that premium is being used to help finance a put. So if you're in a situation where you're just uncertain of where price could go, or you're in an area of consolidation, chop, et cetera, it's a technique for them to be able to use some options without getting completely run over, because they've got equity that balances out that
Interesting.
options position, right? So
Okay. Yeah.
it really, it is, you're right, it is a limiting factor in circumstances when you're the big fish in
Right.
the options market. It can be very limiting for sure. And that's where you see a lot of buying and selling in SPY, Qs, and SPX,
It's
you
just
see a lot of
easier
that
for their size.
because the liquidity is there, right?
Right. That makes sense.
So that forces a larger hand or a larger fund, a larger deck to take a longer term approach up front and look for quality at a discount
Right.
and buy leaps, which is basically stock replacement, and then they can play around that position because then it's less of an impact when they play short term around a long term position, right?
That
And
makes
that's
sense.
that's
Yeah.
a that's a lot of how I was taught and how it's applied.
Why have you not started your own fund, Ron?
I don't like answering phone calls and
I knew you
explaining
were gonna
my
fucking say that, bro.
decision-making
I'm like, he's got
process.
6 guitars behind him, dude. This guy doesn't want to answer to no investors, right? Like is that really what it is? Because that's always been my thought too. Is like you just go down a rabbit hole if you go down the fund route, even though it's similar knowledge to what you do. It just opens up so many more headaches, right? So you have to be balancing that risk reward, especially if you can continue to grow your income year over year for many years. Like you have, like you see the benefit of it, but also a lot more cons too.
I think there's a lot of pressure in that world. I think
Hmm.
that there's because you're gonna attract friends and family,
Of
and
course.
you don't want to say no, but kind of the Rubicon that you don't cross is that one, right?
Right.
So you don't ever want to be responsible for somebody putting their money and their trust and their care in your hands, and it adds a lot of unnecessary pressure and I think can force bad decisions. So I don't like that, and definitely I don't like taking the phone call of please explain your rationale, and I'm like,
No, definitely not.
we're not having that conversation.
You're like, I've been doing this way too long to have to explain myself to you, buddy.
Exactly,
Yeah,
exactly. So
yeah, for
yeah, I,
sure.
I do I don't like answering to
Okay.
people
I don't
in
blame you.
in that regard.
I
Yeah,
don't blame you. With
yeah.
the to pull it back to our point a few minutes ago about the longer term portfolio and the option stuff, do you think that like, because I know a lot of guys that are using options, even in the more simplistic ways, maybe not as complex as you guys are doing it, but they're using options, especially if like they're under 40 in their brokerage account or in their Roth or in their, their IRA, they're trying to leverage options returns with equity. Do you think you're missing out on returns by being equity only in retirement accounts for people like me? Do you think we need to be doing something with options and learning how to leverage those or no?
I don't think that that's true because I think over time, as you perform and make money, in my opinion, what's worked for me is what I should say is I've taken money out and put it into long-term investments, and as that grows and gets big in size, you move some of that off into less volatile vehicles, right? So, now, especially at my age and station in life, it's a combination of a lot of different things. There's real estate, there's private placements, there's a bond ladder that's in place, there's treasuries, there's munis, there's a whole mix of things that I don't want to touch. I don't want to, it will never come back into my quote unquote trading world, right?
Right,
So
right.
and for me, over the course of time, the things that have worked the best and generated the largest amounts of profits has always been the leap positions, finding quality at a discount, being very, very patient with them. And then, it's kind of like bamboo, right? You plant it and you care for it, and it doesn't do shit for 5 years, and then in year five, it grows 7 feet in a week. Do you know what I mean? So
Yeah.
it's a similar concept. And when those things when those things work and win, the money comes out and it goes to other places. So to answer your question, I don't think that there's a world in which I would ever say to somebody, you shouldn't have your money in longer term vehicles and let that stuff work for you. I think it's
And you're
critically
saying use
important.
the options to feed that,
I think that
not
the
so much be
options
doing
for
that, using that
yeah,
money to
I'm
do
I'm I'm
right.
using
Because
I'm
it's a little bit
using
more speculative, right? In your mind?
yes and no. But if you
Okay.
know how to use the option, you're taking less capital risk for greater percentage returns, and then over time that money's coming out. Look at Costco. Costco is a classic example for me
Okay.
of stock replacement. I started buying Costco with leaps back in June of 23 as from
Oh,
the
dude, that is
long
a
term.
great looking chart. Holy shit.
But the Costco, but up until that point, it wasn't, right. It had been
No.
it was trapped in a range from
Yeah.
uh, April of 22, and then
Yep.
where it bottomed out in
Yep.
May of 22, and then it traded inside of that range for a year, right? So
Hmm.
it wasn't a great thing when it finally started to when the primary trend finally started to give me reason enough to go into the position. I did, and I slowly added to it, right? So that's an example of using leaps to my advantage because it's a $500 stock. I don't want to put a $500,000 of capital risk at work. I will put $100,000 of capital risk at work to have the same level of control that the individual that puts $500,000 to work in it. I have way less capital risk, and I reap the same or similar rewards along the way. The difference is that as it goes up, I can continue to roll to a different strike price and put that profit in my pocket. Eventually, what happens is the cost of my trade is zero. So now I have zero capital risk on the table. But as the stock price moves up, the guy that put 500 grand into it, now the stock's at 700. Now he still has $700,000 of capital risk, right?
Sure.
He's got he
See,
so
it's a much
I've
better
got him
risk
I've got
reward
him beat.
scenario. Yeah.
I've got him beat 8 ways to freaking Sunday, right?
Right.
Like
Right.
I
And this
run
is where options
circles.
make you much more dynamic.
That exactly that, and that's the power of them, and that's where, from a return perspective, I don't like to talk about it because most people are like, "You're so full of shit that you just can't get people to believe the types of returns that you get from a move like that. I mean, that Costco trade is well over $1 million profit over the life of that trade just by leveraging 100 grand, right? As opposed to leveraging a 500,000. So I
Exactly.
did it. I did it in a very hedged way, and I did it in a very controlled way. And there are guidelines that you need to follow. Otherwise, you can blow these trades up. You can blow
Oh
them
yeah.
up. There's a formula. It's not black and white. It's part art, part science, but there's a formula that needs to be followed if you're going to make something like this work. But it works.
And that's where the steam room comes in. So now I ask you the professional question about long-term portfolios. Let's follow it up with a good one. What's your thoughts on the Trump coin situation?
Oh man, I don't know coins. And
Me neither.
my way of trading coins has been just through MSTR, and I've only traded options on MSTR,
Yeah.
and it was really good back in at the end of the year, but it's
Hmm.
it's it's all consolidating right now. So I,
Oh
I
yeah.
don't
Well,
I
and it
don't under
lost a lot of its legs. The end of the year was the
yeah, for
fireworks show up.
sure.
So what was it? 560 or something like that was the high on it, and it's like
Yeah, I
three.
forgot what it get
Let's
up
see,
to, like
340 today.
543, something like that. Yeah.
Yeah,
So
yeah.
I mean, and if this blow if it blows up on Michael Saylor, it will,
Oh God, dude. I
right?
can't I would love for it to happen, but I think it would be bad. But I think it would be kind of funny, but it would be kind of bad. You know what I mean? I'm like, I kind of don't care which way it goes because either way it's super entertaining. If Bitcoin goes to a gajillion and he becomes treasurer, Bitcoin, prime minister, Bitcoin of the world, or whatever he wants to be, funny. But if they blow up, it's like, yep, seen that before. You know what I'm saying?
Yeah. I mean, the thing for me right now that I'm trying to wrap my brain around, is just what's happening with AI right now. Like I'm trying to understand, how does an LLM work? What technology needs to go into it? To me, that seems more enticing and exciting longer term than coins do, mostly because I don't understand coins. I think coins just trade primarily off of technicals. And when they're out of favor, like now, or if they're consolidating, if you're not really on your game, I think that they can just bleed traders
Oh yeah.
dry because
Oh
the back
yeah.
and forth is brutal, right?
No, I think that's a great comparison, like not a comparison, but a way to look at it. Like AI is the more, coins are like the I don't know, you don't want to call it like the shit league or the D league or whatever, but it kind of is. Like it's still an emerging market. Who knows? Some people make the argument that tokenization is the future and everything is going to have a token. And yes, maybe, right? But like it's risky too. Like you said, you can get
Yeah.
rug pulled, you can get bled to
Yep.
death. So there's still a lot that has to develop there. Versus you look at AI. I mean, Nvidia dropped 17% yesterday. It was the biggest drop for a stock in history, right? Based on market cap and everything.
On market cap,
On
yeah.
on what? Nothing negative, really, right? Am I wrong? So it's like the AI race is just competitive. It's still gonna boom, right? That's what that
Yeah,
says to me.
and we're still in, I don't know, the first or second inning or however you want to
That's it.
look
It
at.
has to be.
It's still very young and raw. And I'm just trying to wrap my brain around, like, look at the semiconductors, right? Like, I think just generally, this is a sold off segment,
What do you
and
look at for that? I'm looking
I
at
think it's overdone.
SOXX. What are you looking at?
I use Soxol, I use SMH. And
SMH.
I only use like those to me are just indications of
Yeah.
where is the basket at
Right. The wide
generally.
market.
Exactly. My opinion and where I think the next multi-million dollar trades are going to come from, I think
Yeah.
they're going to come from the semiconductor world. And I think that there are some really, really high quality companies that are critically involved in the process of manufacturing the chips that are going to make people who are patient and apply the trade the right way are going to make millions. Like a perfect example is ASML, Lam Research, KLA. Like these are very oversold names. Everybody is focused on AMD.
Hmm.
I'm not one of those people. I like these other names because I like to be involved in, like, an ASML, for example,
Dude,
is a
ASML down 42% off the highs.
it is a
Plenty of upside.
very critical piece to the manufacturing of high level chips, not the IoT garbage that comes out of China. I'm talking about the high level chips that are you have to have them for us to go about our day-to-day life.
So
It's as
there's going
critical
to
as,
be
as
demand.
oxygen and oil,
Right,
right?
right. You know what's amazing about some of these semiconductors is they make the COVID crash back just a couple of years ago look like nothing. Like they've ripped
I
way
agree.
past those pre-COVID highs. Like it's a whole new genre of trading now that AI has taken the forefront after COVID. It's extremely
Yep,
impressive. It shows you how much that like legs this is going to have. So I totally agree with you. I think
I
that is
agree.
where I had a guy on the podcast 2 weeks ago. He said he thinks healthcare is where there's good opportunity for some upside returns in the next few years. And I'm like, I'm a little nervous about healthcare. I like AI still. I think AI and chips and still just with so much growth potential, it's too hot to ignore. I agree with you.
Do you follow, I think everybody at least is aware of it, but do you follow the any of the activities when Nancy Pelosi gets involved in trades?
I mean,
Like
I see this stuff on Twitter. I don't follow it actively, but I know what she's doing. And I know that if you track her stuff, like she makes a shit ton of money trading stocks, like which is
she's
extremely
she's
crazy.
the best trader on the street. I
It's
mean,
it's
hands down.
unbelievable. I mean, even
Yeah.
if you look at hedge funds last year, like large hedge funds, I think only a handful actually beat the S&P. It wasn't like 100 of them. It was like 10 maybe. And then look
Yep.
at her, she's outperforming them. That's
Yeah.
crazy. Like what's going
Yep.
on?
Well, I
Somebody
mean, you
throw a
get,
flag, dude. Call Patrick Mahomes something, right? Come on, fuck.
well, I mean, first of all, it's a time honored tradition and privilege that those people hold. And what I like about that scenario is at least we get to see what it is that she's buying or selling. It might not be timely, but at least you get to see what's going on there, right? So
100%.
I don't mind, and I did this last year, and I'm doing it this year. Like last year, she was a buyer of Palo Alto Networks, and she bought that thing when the stock was, I can't, let me see if I can go back and find it. That was back in February of 24, so a year ago. And she bought before earnings. They missed, and the stock got hit pretty
I see
good.
it.
Like,
I see it. Yep.
and then
Down to
she stepped
133.
back in and bought more. And when she stepped back in and bought more, I was like, fuck it,
Dude,
I'm
that's the
buying
bottom
this.
of 24, dude. And it's up 50%.
And
It's
most
amazing.
recently she stepped in and she bought this company called Tempus AI, which is a medical platform. So you talk about, medical having upside. So this is medical plus AI. And
Mm.
if she's buying leaps, she's doing the same thing that I'm talking about, which is stock replacement. So if she's going to buy it, she
Dude,
knows
so her
something.
guy and your guy must know each
I'm
other.
just I'm exactly. I bought it when I saw when it was published that she bought it. I immediately jumped in and I bought the leaps. I didn't buy the same line, the same strike that she did. She buys a little too deep in the money for my liking. I buy a little bit less deep, but still deep. And I don't care about the back and forth in the day to day of this name. As a matter of fact, if it comes back down to where she bought or fills that little gap, I will
Hmm.
probably buy more unless it's published that she dumps it. She
Right.
freaking knows something. I'm telling you,
Dude,
she
she
knows
does.
something.
It's proven. It's not a guess anymore. Like the stats are there.
Yeah.
Definitely, it's safe to say she's better than Jim Cramer. That's a given.
Austin, where's my dog? He's better than JC's
Jim
back there
Cramer. Yeah. I
stretching
mean,
around. He's
yeah,
better than
dude.
Jim Cramer is.
It's crazy. I mean, what's crazier, the fact that Nancy Pelosi's a policymaker and she's got a better stock trading record than the hedge funds, or that the guy that they say is the guy on CNBC sucks so bad they inverse him and make more money? I don't know which one's crazier.
I don't, first of all, I don't listen to nor do I watch any of those programs
It's
because
terrible. Dude, they're
they
terrible.
really will do deleterious things to your thought process.
Oh
Like all
yeah.
of these guys that I can't do it. I came downstairs last night. One of my kids had CNN on, and there
No.
was
Break
somebody
the
talking
TV.
about exactly, and I was just like, oh my God, like somebody was up there just spewing shit about Tesla and Tesla stock, and then I was just like, just turn them off, please, turn them off. I don't want to hear it. Like they're all of those guys are just there to get ratings, and I
That's
mean, a
it.
lot of these guys get
That's it.
paid, right? A lot of these guys
No,
get
that's why,
paid
like
to be
now, I
on.
see, dude, you guys do it right. You get a lot of your news from X. You guys have the right way to do it. Like that's where all the real news is now because you can get it without a headline, without a bias on it.
Well, and there's other sources, and there are guys that in our room that pay for Bloomberg, and if there's something that comes out that we're all following together, they'll throw out there, hey, this just came across Bloomberg, and then within 3, 4, 5 minutes, it's everywhere else. And I mean, you can just pull up Yahoo Finance, or you know what I mean. You can pull up a lot
100%.
of different sources other than freaking CNBC. I mean,
Yeah.
they're selling advertisements
No, for
nonstop,
sure.
right? They don't give a shit about whether the
But I do
information is
like how
correct or
that the
not.
older guy Joe has gotten extra conservative on the show. He's taken a real turn, makes it a little more sassy for me. It's funny too. So it's
I
sometimes
don't
it's
even know who you're
comedy.
talking about because I don't
Yeah, yeah,
watch.
yeah. I know you don't even know, but it's funny. So no, it's good. Listen, Ron, great info, bro. Like I got two full sticky notes here of timestamps that I got to go back and take some notes
Oh,
on. But I
nice.
think this is going to be really good. A lot of VWAP stuff was really good. The
Yeah.
EMA tips you gave in the beginning, keeping the losses small. So ton of good tips. So I'll make sure we link to the Steam room. Is that the best place to send everybody that listened all the
Yeah,
way
for
through?
sure. Yeah, yeah,
Okay,
yeah. And
cool.
if you want, what I'll do is I'll send you. I think at my Twitter profile, I've got a link to the trial. Like we do a 2 week trial for eight
Perfect.
bucks, right?
I'll
Like
grab that.
it's
Yeah,
it's
we'll
pretty
do that.
easy. Yeah.
That's awesome. And last thing, everyone, just so you know, Ron will be rooting for the Eagles to help support me in the Super Bowl.
Do you know what? You know how much I dislike both of these teams, but I want to see Patrick Mahomes lose so bad
There it
that
is. I
I,
knew it.
I
I'll take it.
I'm not going
We'll
to be
take you in.
upset to see, and that's all I'll say is I want Patrick Mahomes to lose. I'm not going to
Everybody
say
wants him to
I
lose.
want your
There's
team to
no
win.
way dude, no way this guy without a six pack is about to get a three-peat Super Bowl. Not a chance, dude.
I can't stand it. I can't
I
stand
know.
it.
I know. But Ron, this has been great, buddy. I got to run because I got another meeting. It's always good to
All
chat
right.
with you. We'll do it again soon, okay?
Thanks, Austin.
Awesome. Thanks, Ron.
See you, man.
See you, buddy.